B. It shall be the duty of the Secretary of the Treasury to invest such portion of the fund as is not, in his judgment, required to meet current withdrawals. Such investment may be made only in interest-bearing obligations of the United States, or in obligations guaranteed as to both principal and interest by the United States. For such purpose such obligations may be acquired, 1. On original issue at par, or 2. By purchase of outstanding obligations at the market price. The purposes for which obligations of the United States may be sued under the Second Liberty Bond Act, as amended, are hereby extended to authorize the issuance at par of special obligations exclusively to the fund. Such special obligations shall bear interest at a rate equal to the average rate of interest, computed as of the end of the calendar month next preceding the date of such issue, borne by all interest-bearing obligations of the United States then forming part of the public debt, except that where such average rate is not a multiple of 1/8 of 1%. The rate of interest of such special obligations shall be the multiple of 1/8 of 1% next lower than such average rate. Obligations other than such special obligations may be acquired for the fund only on such terms as to provide an investment yield not less than the yield which would be required in the case of special obligations if issued to the fund upon the date of such acquisition. C. Any obligations acquired by the fund, except special obligations issued exclusively to the fund, may be sold at the market price, and such special obligations may be redeemed at par, plus accrued interest. D. The interest on, and the proceeds from the sale or redemption of, any obligations held in the fund shall be credited to, and form a part of the fund. E. The fund shall be invested as a single fund, but the Secretary of the Treasury shall maintain a separate book account for each state agency, and shall credit quarterly on March 31st, June 30th, September 30th, and December 31st of each year to each account, on the basis of the average daily balance of such account, a proportionate part of the earnings of the fund for the quarter ending on such date. F. The Secretary of the Treasury is authorized and directed to pay out of the fund to any state agency such amount as it may duly requisition, not exceeding the amount standing to the account of such state agency at the time of such payment. Administration, refunds, and penalties. Section 905. A. The tax imposed by this title shall be collected by the Bureau of Internal Revenue, under the direction of the Secretary of the Treasury, and shall be paid into the Treasury of the United States as internal revenue collections. If the tax is not paid when due, there shall be added as part of the tax interest, at the rate of 1/2 of 1% per month from the date the tax became due until paid. B. Not later than January 31st, next following the close of the taxable year, each employer shall make a return of the tax under this title for such taxable year. Each such return shall be made under oath, shall be filed with the Collector of Internal Revenue for the district in which is located the principal place of business of the employer, or, if he has no principal place of business in the United States, then with the Collector at Baltimore, Maryland, and shall contain such information, and be made in such manner as the Commissioner of Internal Revenue, with the approval of the Secretary of the Treasury, may by regulations prescribe. All provisions of law, including penalties, applicable in respect of the taxes imposed by Section 600 of the Revenue Act of 1926, shall, insofar as not inconsistent with this title, be applicable in respect of the tax imposed by this title. The Commissioner may extend the time for filing the return of the tax imposed by this title under such rules and regulations as he may prescribe with the approval of the Secretary of the Treasury, but no such extension shall be for more than 60 days. C. Returns filed under this title shall be open to inspection in the same manner, to the same extent, and subject to the same provisions of law, including penalties, as returns made under Title II of the Revenue Act of 1926. D. The taxpayer may elect to pay the tax in 4 equal installments instead of in a single payment, in which case the first installment shall be paid not later than the last day prescribed for the filing of returns. The second installment shall be paid on or before the last day of the third month, the third installment on or before the last day of the sixth month, and the fourth installment on or before the last day of the ninth month, after such last day. If the tax or any installment thereof is not paid on or before the last day of the period fixed for its payment, the whole amount of the tax unpaid shall be paid upon notice and demand from the collector. At the request of the taxpayer, the time for payment of the tax, or any installment thereof, may be extended under regulations prescribed by the Commissioner, with the approval of the Secretary of the Treasury, for a period not to exceed 6 months from the last day of the period prescribed for the payment of the tax, or any installment thereof. The amount of the tax in respect of which any extension is granted shall be paid, with interest at the rate of 0.5% per month, on or before the date of the expiration of the period of the extension. In the payment of any tax, under this title, a fractional part of a cent shall be disregarded unless it amounts to 1/2 cent or more, in which case it shall be increased to 1 cent. Interstate Commerce. Section 906. No person required under a state law to make payments to an unemployment fund shall be relieved from compliance therewith on the ground that he is engaged in interstate commerce, or that the state law does not distinguish between employees engaged in interstate commerce and those engaged in intrastate commerce. Definitions. Section 907. When used in this title, a. The term employer does not include any person, unless on each of some 20 days during the taxable year, each day being in a different calendar week, the total number of individuals who were in his employ for some portion of the day, whether or not at the same moment of time, was 8 or more. b. The term wages means all remuneration for employment, including the cash value of all remuneration paid in any medium other than cash. c. The term employment means any service, of whatever nature, performed within the United States by an employee for his employer, except 1. Agricultural labor, 2. Domestic service in a private home, 3. Service performed as an officer or member of a crew of a vessel on the navigable waters of the United States, 4. Service performed by an individual in the employ of his son, daughter, or spouse, and service performed by a child under the age of 21 in the employ of his father or mother. 5. Service performed in the employ of the United States government, or of an instrumentality of the United States. 6. Service performed in the employ of a state, a political subdivision thereof, or an instrumentality of one or more states or political subdivisions. 7. Service performed in the employ of a corporation, community chest, fund, or foundation, organized and operated exclusively for religious, charitable, scientific, literary, or educational purposes, or for the prevention of cruelty to children or animals, no part of the net earnings of which inures to the benefit of any private shareholder or individual. d. The term state agency means any state officer, board, or other authority designated under a state law to administer the unemployment fund in such state. e. The term unemployment fund means a special fund established under a state law and administered by a state agency for the payment of compensation. f. The term contributions means payments required by a state law to be made by an employer into an unemployment fund, to the extent that such payments are made by him without any part thereof being deducted or deductible from the wages of individuals in his employ. g. The term compensation means cash benefits payable to individuals with respect to their unemployment. Rules and Regulations. Section 908. The Commissioner of Internal Revenue, with the approval of the Secretary of the Treasury, shall make and publish rules and regulations for the enforcement of this title, except sections 903, 904, and 910, allowance of additional credit. Section 909. A. In addition to the credit allowed under section 902, a taxpayer may, subject to the conditions imposed by section 910, credit against the tax imposed by section 901, for any taxable year after the taxable year 1937, an amount, with respect to each state law, equal to the amount, if any, by which the contributions, with respect to employment in such taxable year, actually paid by the taxpayer under such law before the date of filing his return for such taxable year is exceeded by whichever of the following is the lesser. 1. The amount of contributions which he would have been required to pay under such law for such taxable year, if he had been subject to the highest rate applicable from time to time throughout such year to any employer under such law. Or 2 and 7/10% of the wages payable by him with respect to employment with respect to which contributions for such year were required under such law. B. If the amount of the contributions actually so paid by the taxpayer is less than the amount which he should have paid under the state law, the additional credit under subsection A shall be reduced proportionately. C. The total credits allowed to a taxpayer under this title shall not exceed 90% of the tax against which such credits are taken.